What's happening, Bitcoin Bulletin viewers? Get ready for a rapid-fire rundown of the biggest stories shaking up the crypto world. We're diving headfirst into a market buzzing with activity, where massive options expiries are creating serious waves and institutional power is shifting the landscape before our eyes. Plus, we've got major corporate treasury moves and a look at how AI is impacting the financial future. This is not just news, this is the pulse of the market, and you're getting it first. We're tracking billions in potential market-moving events and dissecting strategies that could redefine the game. You don't want to miss a single second of this. Let's get straight to it. First up, a colossal options expiry event is on the horizon, poised to inject a significant dose of volatility into Bitcoin and Ethereum. We're talking about billions of dollars in contracts about to be settled, and the market is holding its breath to see how these massive expirations will play out. Will they trigger a surge, a dip, or something entirely unexpected? The tension is palpable as traders and investors brace for the fallout from this critical financial event. This is the kind of move that can redefine market direction, and we've got all the details you need to understand the stakes. Stick around, because this is crucial intel you won't find anywhere else. Next, we're talking about a seismic shift in institutional power that's quietly reshaping the entire crypto frontier. The big players are making moves, and the flow of capital is telling a story of evolving dynamics. We're seeing significant capital inflows and new strategies emerging that could signal a new era for digital assets. What does this mean for the average investor? How are these institutional giants influencing the market's trajectory? We're breaking down the power plays and what they signal for the future of crypto. You absolutely need to know what's happening behind the scenes. Then, get ready for a major corporate treasury announcement that's turning heads. One of the big names in the design world is stepping out and revealing a significant stake in a Bitcoin ETF. This isn't just a small investment. It's a bold statement about corporate adoption and a clear signal that digital assets are becoming a core part of treasury management. We'll explore what this means for the company, for the market, and for the broader trend of corporate treasuries embracing crypto. It's a fascinating development that highlights the increasing integration of digital assets into traditional finance. And finally, we're diving into the complex interplay between artificial intelligence and corporate finance, specifically looking at how AI-driven margin pressures are influencing strategic decisions. We'll explore how companies are navigating these new economic forces and what it means for their bottom line and future investments. This is cutting-edge analysis that connects the dots between technology and financial strategy. Don't go anywhere, you're about to get the full picture. Make sure you hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Let's go. A massive options expiry looms. The cryptocurrency market is bracing for a significant event as nearly $14.6 billion in Bitcoin and Ethereum options are set to expire. This substantial expiry, occurring on the final Friday of August, is expected to inject a notable degree of volatility into the market, with analysts closely watching how these large volumes will influence price movements and investor sentiment. The scale of this expiry dwarfs that of the previous week, highlighting its potential impact. Digging into the details, Bitcoin options represent the lion's share of this expiring notional value, totaling $11.47 billion. The open interest for these Bitcoin contracts stands at an impressive 102,598 contracts. The put-to-call ratio, PCR, for Bitcoin is reported at 0.78, suggesting a market leaning towards bullish sentiment, with more call options, bets on price increases, than put options, bets on price decreases. A key focal point for Bitcoin options is the max pain level, identified at $115,000. This is the price point where the majority of option holders are anticipated to experience the most significant financial losses, a level that often becomes a magnet for prices as expiry approaches. Ethereum's options expiry is also substantial, with a notional value of $3.137 billion. The open interest for Ethereum contracts is even higher in terms of volume, at 697,419 contracts. The PCR for Ethereum is 0.77, mirroring Bitcoin's bullish bias. The max pain level for Ethereum is set at $3,800, another critical price point that could see price action gravitate towards it. These expiry figures are particularly noteworthy when compared to the previous week's $5 billion expiry, with the current larger amount attributed to it being a month-end expiry. Derivative analysts have observed that while Ethereum options activity indicates cautious optimism, the asset appears to be in a slightly weaker position relative to Bitcoin. Key support and resistance levels for Ethereum options are noted at $3,800 and $5,000. Adding another layer of complexity to the market's outlook is the impending earnings report from tech giant NVIDIA. The market is actively debating whether Bitcoin's price action will correlate with the volatility expected in the equity markets following NVIDIA's announcement, or if it will demonstrate a decoupling from traditional market trends. NVIDIA's implied volatility is pegged at a high 100%, with projections of a potential 7% price swing, which could significantly influence Bitcoin's own volatility expectations. As the expiry deadline approaches, Bitcoin is trading around $111,428 and Ethereum near $4,468. There's a prevailing expectation that prices might gravitate towards their respective max pain levels. Market participants are keenly observing whether this expiration will catalyze the anticipated breakout or lead to a reversal in market sentiment. The market is anticipated to find a new equilibrium post-expiry at 8:00 UTC on Deribit, as traders adjust their positions in the evolving market landscape. Hold on tight as we break down the institutional movements that are fundamentally changing the game. Next up, we're revealing how institutional power shifts are reshaping the entire crypto frontier. Institutional power shifts reshape crypto's new frontier. The global cryptocurrency market is experiencing a significant uplift, marked by a substantial $600 billion increase in market capitalization since January 2025. This surge is largely attributed to robust inflows into Bitcoin and Ethereum exchange-traded funds, ETFs, and the remarkable growth in stablecoin supply, which has now reached a record $277.8 billion. This expansion signals a renewed wave of investor confidence and increased liquidity within the digital asset ecosystem. Institutional investors are playing an increasingly pivotal role in this market transformation. Through the burgeoning ETF market, these entities have collectively acquired approximately 1.29 million Bitcoin. This substantial accumulation by major financial players is not only bolstering market liquidity, but also fundamentally altering power dynamics within the crypto space, with institutional holdings now representing a significant portion of the circulating supply. Beyond ETFs, public companies have also been actively expanding their Bitcoin reserves, with 174 firms now holding around 1.07 million BTC, accounting for roughly 5.4% of the total circulating Bitcoin supply. The growing participation of institutional investors has catalyzed a broader structural shift across the market. Decentralized exchanges, DEXs, are capturing a larger share of trading volume, now accounting for 23.1% of spot volumes, while decentralized futures contracts represent 9.3% of the market. This increased activity on decentralized platforms, coupled with a significant growth in on-chain loans, exceeding $79.8 billion in locked value, reflects a maturing ecosystem driven by enhanced on-chain activity and the deeper integration of decentralized finance, DeFi protocols. The rise in stablecoin supply, up by 35% year-to-date to $277.8 billion, is a critical indicator of market health and readiness for further expansion. This surge in stablecoin liquidity often precedes an increase in purchasing power, suggesting that significant dry powder is available to fuel future market growth. The utility of stablecoins is also expanding beyond trading, with increased adoption for payments and settlements, pointing towards broader mainstream integration. However, the path forward is not without its challenges, particularly concerning regulatory developments in key markets. South Korea, a significant player in the global crypto landscape, is currently grappling with regulatory uncertainty surrounding stablecoins. Multiple legislative proposals are being considered in its parliament, each offering different approaches to stablecoin issuance, asset backing, and interest rate policies. These regulatory discussions are being closely monitored by major crypto entities like Binance and Tether, as the outcome could either open up new market opportunities or impose significant operational burdens that could impact the broader Asia-Pacific region. The Bank of Korea has voiced concerns regarding the potential risks associated with allowing non-bank entities to issue stablecoins at scale, citing potential disruptions to monetary policy and overall financial system stability. As South Korea endeavors to strike a balance between fostering innovation and ensuring macroeconomic stability, its regulatory decisions could establish a precedent for other nations navigating similar challenges. This institutional surge is impressive, but what happens when established companies start holding digital assets? Next, we're looking at a major design firm that's making waves with its Bitcoin ETF holdings. Figma's bold Bitcoin bet amid AI-driven margin pressures. In a surprising revelation during its inaugural earnings report as a publicly traded company, the renowned design software provider Figma Inc. has disclosed a substantial $91 million investment in a Bitcoin exchange-traded fund, ETF. This significant allocation is part of its broader Treasury holdings, which amount to $1.6 billion in cash and marketable securities, signaling a bold move into the digital asset space for the tech company. Figma's chief financial officer, Praveer Melwani, confirmed the company's holdings during the second quarter earnings call, stating, "Within the $1.6 billion, we also held approximately $91 million in our Bitcoin exchange-traded fund." While this figure represents a modest portion compared to Figma's $33.2 billion market capitalization, it aligns with a growing trend of corporations incorporating Bitcoin into their treasury strategies, treating it as a valuable digital asset. The company did not elaborate further on its specific plans or long-term strategy for these Bitcoin holdings, leaving investors and market observers to speculate on the motivations behind this diversification. This move places Figma alongside an increasing number of forward-thinking companies that are recognizing the potential of Bitcoin as a store of value and a hedge against inflation. Adding to the financial narrative, Melwani also issued a warning regarding potential margin pressures in the near future. He explained that these pressures are anticipated as Figma ramps up its investment in artificial intelligence, AI, products and features, such as its new offering, Figma Make. The increased inference spend associated with these AI initiatives is identified as the primary driver for anticipated gross margin compression on a quarter-over-quarter basis. In terms of capital allocation and strategic vision, CEO Dylan Field reiterated the company's willingness to make big bets if they strongly believe in the underlying proposition. He further emphasized a rigorous vetting process for larger mergers and acquisitions, stating, "We have a very high bar for M&A at scale." This suggests a disciplined, yet ambitious approach to growth and strategic investments. Figma's second quarter financial results showed a healthy increase in revenue, reaching $249.64 million, a significant jump from $177.19 million in the same quarter last year, and surpassing analyst expectations of $228.2 million. However, the company's earnings per share, EPS, fell short of projections, reporting 0 cents per share against an analyst consensus of 18 cents per share. Following the earnings announcement, Figma shares experienced a notable reaction. While the stock closed up 3.9% at $68.13 on Wednesday, it saw a decline of 15.36% in after-hours trading. Despite the mixed financial signals, Figma's stock is recognized for its strong momentum, particularly in medium and long-term price trends, according to Bitcoin Bulletin's Edge stock rankings. This corporate embrace of Bitcoin is a clear signal, but what's the broader impact of these institutional moves? Now, let's shift gears to explore the strategic Bitcoin acquisitions shaping the future of institutional adoption. Treasury BV's strategic Bitcoin acquisition, paves way for institutional adoption. Treasury BV, a significant financial entity, has recently executed a strategic acquisition of Bitcoin, a move that is poised to have considerable implications for the broader landscape of institutional adoption within the digital asset space. This acquisition underscores a growing trend among sophisticated financial institutions to integrate cryptocurrencies into their investment portfolios, signaling a maturing market and increasing acceptance of Bitcoin as a legitimate asset class. The strategic rationale behind Treasury BV's decision likely stems from a combination of factors, including Bitcoin's potential as a store of value, its performance as a hedge against inflation, and its increasing liquidity and accessibility through regulated financial products. As institutional interest continues to mount, such acquisitions are critical in building confidence and demonstrating the viability of digital assets for large-scale investment. This development is particularly significant in the context of evolving market infrastructure and regulatory clarity. The availability of regulated investment vehicles, such as Bitcoin ETFs, has significantly lowered the barrier to entry for institutional investors, enabling them to gain exposure to Bitcoin through familiar and compliant channels. Treasury BV's move can be seen as a validation of these new pathways for institutional capital deployment. Furthermore, the acquisition by Treasury BV is expected to catalyze further institutional adoption. As more prominent financial players enter the market, it creates a positive feedback loop, encouraging others to explore similar strategies. This growing institutional participation not only increases market depth and stability, but also contributes to the ongoing narrative of Bitcoin's integration into the global financial system. The implications of this acquisition extend beyond mere investment. They represent a shift in the perception of Bitcoin from a speculative asset to a strategic holding. Financial institutions are increasingly recognizing the long-term potential and diversification benefits that Bitcoin can offer to traditional portfolios. This strategic embrace by entities like Treasury BV is instrumental in solidifying Bitcoin's position as a key component of modern investment strategies. The market will be closely watching the subsequent actions and performance of Treasury BV's Bitcoin holdings, as they will undoubtedly serve as a benchmark and potential case study for other institutions considering similar allocations. This strategic acquisition by Treasury BV is a clear indicator that the era of institutional adoption of digital assets is not only underway, but is also accelerating, reshaping the future of finance. These strategic moves are reshaping the financial world as we know it. Stay tuned as we recap all the day's biggest stories. And that's a wrap on today's crucial updates. We saw a massive Bitcoin and Ethereum options expiry create market tension, institutional power continue its seismic shift in crypto, a major design firm reveal a significant Bitcoin ETF stake, and strategic Bitcoin acquisitions paving the way for broader institutional adoption. Don't miss out on future insights. Hit that like button, subscribe to Bitcoin Bulletin for all your crypto news, ring that notification bell so you're always in the loop, drop a comment with your thoughts, and follow us on all social media platforms for real-time updates. We'll see you next time.